market sells down as we head into major catalysts. Can the bulls fight back? This is Invest with Jacob. Okay, guys, so in yesterday's video, we were talking about the fact that we were looking for the bulls to push up towards 5187 to 5200 and then reject strongly from there. However, they were unable to break out and rejected strongly from 5150 and broke key support levels along the way. Now the question is, can the bulls fight back? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts, we had 2 short trades yesterday, both of them really good. We also have our results for the first 4 months of the year, since yesterday was the last day of April. I wanted to show you a long-term vision instead of a trade here and there. In the first 4 months of the year, we are doing quite well. And the 25 contracts is how many I trade per trade, but you can trade more or less from there. As you can see, we are a winning group, and we do very well. And if you want to be part of this winning team, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And our plan played out pretty well. They came up just short of the target here as we were looking for this ABC to complete up to the 1.0, which would have hit this downtrend line, among other things. And the bulls were unable to even get up to that. They only got to the 764, which is pretty weak, and turned down strongly from there. So as it stands right now, the primary count is that this ABC for B has completed, and we're starting the C wave down. Now, I do have a little bit of issue with that, as this top area is overlapping and not the cleanest of structures. But it is better on the SPX when you don't have all the after hours trading in there. So I will give the bears the benefit of the doubt that they are starting the C wave down. What we look for is a 5-wave structure into this low, a bounce, and then down from there. Now we are trading off of a diagonal, and I've warned many times about sharp selling to the downside, which we have seen all through April. And if they continue to do that here, we don't have to get this bounce. They can come down to this low and consolidate and give us, a sideways move here and then break down directly from there. And that would be indicative of a diagonal selling off. So don't assume that you're going to have this bounce to necessarily get in, but this would be standard market behavior to come down here, hit this low and bounce, and then break through after that. So this low will be a key, as is this B wave low for our alternate count. So let's talk about that. In the alternate count, it would be that we're just completing the A phase of the move up, where this would be A, B, C, but this would be the A of that move, and then this would be the B, and C would be a little bit higher up toward that 51.87 to 52.26 area to complete the B wave. So it would look more like this with one more move upcoming. And with the Fed tomorrow, I could see that as a distinct possibility because, with the Fed, you can get this kind of move where it spikes up and then down. You can get this opposite where it spikes down and then up. You just get a lot of volatility with the Fed. So it is possible also, because it is the Fed. That is another reason that this bounce may or may not happen, that you could see the Fed do this number. We've seen that before in both directions, where the Fed just blows through support that you think would bounce. So just keep an eye on this low. That would be the low to the downside, and of course the high to the upside here at 51.50. So the secondary count, again, really needs to hold this low at 50.20. Below that, and I'm going to favor the primary count. So if they come down and break this low at 50.20, then I am going to look more for this continuation on down. But if they can hold this low here and start a rally back up, we would look for them to push up to, like I said, about that 5,200 area or so. Over on the NASDAQ, as you might assume, very similar counts on the NASDAQ, where we're calling it all done here with B. And the NASDAQ got a lot closer to its 1.0. It was above its 764 decently. Just came 100 points short of the 1.0, so not very surprising to see it turn down strongly short of that. That is weak from the bulls to be unable to hit the 1.0 on both charts and break down through key support levels. So overall, our primary count, again, is that B is done. We're looking for a 5-wave move down. So you got the 1, 2 up here, and then 3, 4, 5 into this low, a bounce, and then down from there. Again, this bounce is subject to change, given that we have the Fed, given that we're trading off a diagonal, given that the bears have been pretty strong. This bounce does not have to happen, or it could be fast. It could be a Fed, spike up a couple 5-minute bars and then down from there. So just as a caveat, the alternate count, again, would be the same as the ES, where this move up is A, B, C of A. We're looking for B down, and then C up toward the 1,100 area, 18,164 area. And in that case, these would just all slide over one peak like this, and the B wave would move up like this. So I don't necessarily think that's the case, but until we actually break it down and follow through to the downside, it is a possibility. It's something we need to watch overall. The bulls do have a path. It's not like the bulls are completely dead, but you're going to have to sell me on how this move up is impulsive right here. It's pretty clearly 3 waves and then a pullback into wave 1 territory. And then, the next move up, which is a pretty clear ABC in my opinion. And then you get the B wave, which is another deep pullback, and then, the move up and the failure back down. So could you count this as a 1, 2, 1, 2? Yes, but really it's a failed break over the pivot at the 764. It broke back down to the 236, which is just not common. They came up to the pivot, came back, and then through, and then failed to hold this low, and that's really a bearish sign. So yes, it is possible the bulls can hold down here, hold this B wave low, and take it to new all-time highs. However, I would have to see it before I would believe it, and I would have to see them break out over this 18,334 area before I'm on board with the bulls taking back control of the market. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it. Interact with the group, PT and I. Make sure you love it, and it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose just by checking it out. We also have our training material, our beginner's course and our advanced course. And in our advanced course, we go over the more complex patterns that Elliott has, the diagonals, the advanced fib levels, the double and triple threes, flats, triangles, etc. We go through all those complex patterns. We show you how they draw out. Later on in the video, we give you the fib levels so you understand how to measure them and how to find the key levels. And then later on in the video, we go to the charts and look at them on charts so you can see what they look like in actual trading and where you can enter and how they hit the fibs and reverse just like this. This is a good example of a diagonal in the opposite direction. So this is what we're looking for in a much bigger scale to the downside, because this is a diagonal completing, and this is the buyback of that diagonal. We're just doing it the other way where it went up, and now we're looking for the sell down. So just a little example there of what we're looking for. So as you can see on the screen, traders are loving this course. It is helping them with these complex patterns and helping them make money in these overlapping markets that are super choppy like this. But if it's too advanced for you or you're just getting started with Elliott Wave, we also have our Elliott Wave 4 Beginners Online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It can be confusing when good news makes the market go down and bad news makes the market go up. And that's because the news cycles are simply catalysts. The tone of the news doesn't matter. Elliott knew this long ago, and he knew that the key levels are what mattered, and he knew what happened when they held and what happened when they broke. This gives you a huge advantage over the rest of the market. This course is 25 videos where we go over 3 parts. The introduction, where we go over your expectations, your mindset and emotion, the Elliott Wave Theory and why it works, chart setup and tools, the MACD, all the different tools that you need with Elliott Wave, how to use them and why, and the Elliott Wave 4 Beginners area where we go through each of the waves, how they work, how to measure them, how to find the key levels, the corrective depth theory, all the different things you need to understand the market in a way that makes sense. The cool thing about both of these is if you want to get them together and you don't want to pay for both of them separately, we do have a bundle plan so you can get a discount. And if you don't want to pay anything at all, you can get them for free simply by joining one of our rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing in day trades, so we do trade quite often in my room. If you're looking for futures trading, individual stocks, income trading, and advanced trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, income trading. He's killing it with the income trading, guys. It's absolutely crazy. Income trading, futures trading, and his reduced risk binary method that crushes the market to get you in at a cheap price and get you big multiples on your money, and it's how he structures those trades that's so unique. Something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we could all make money together. Key takeaways for today: primary path is down. We're looking for 5 waves off of this high, a bounce, and then a breakthrough. However, if they can hold this 50-20 area and push back up, we could see a B wave back up into the 5192 to 5200 area and a bigger move higher. Over on the NASDAQ, similar setup. We are looking for down as our primary, where we'd look for a 5-wave move into the lows, a bounce, and then a breakthrough to the downside. However, if they can hold this low here at about 17,308, we would look for possibly a bigger B wave if they can rally back up. Guys, that is your market update for today. I'll talk to you tomorrow.